This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on January the 4th, 2013. Happy New Year. And we're taping it exactly 8:36. That is Mountain, 10:36 Eastern Time. Radio show runs 6:30 CHED in Edmonton, QR77 in Calgary, and this week we add News Talk 1010 in Toronto, a legendary station, CFRB. If you ever miss a radio show, they are archived on Harold's website, HESradio.com, also rarecoloreddiamonds.com. Listen on the radio, you can listen online, and we have a podcast. You can listen anytime you like through the podcast. All you need to do is have iTunes on your smartphone, your tablet, and you can listen to our podcast every week. We're portable. We go wherever you do. Harold, as we start the show today, yes, they did sort of fiddle around the edges with the fiscal cliff. They sort of averted the fiscal cliff, but the bigger problem is they're going to add $4 trillion to the U.S. deficit. Obama got his way. The other problem is here in a few weeks, they're going to have to start fighting again over the debt ceiling, raising the debt ceiling. And the jobs numbers came out this morning in the United States. They added 155,000 jobs, a very poor number. The unemployment number stayed at 7.8%. One of the stories that sort of affected the hard asset market this week was that the Fed minutes came out, and we know the Fed said they were going to use quantitative easing and purchase about $1 trillion this year of print U.S. dollars. And now suddenly in the minutes, they're sort of maybe possibly backing off how long they do that this year. So the hard asset market was affected somewhat. But the truth of the matter is when you have a jobs report like this and a big fight coming up over the fiscal cliff, we're going to see a lot of volatility. And what we're seeing in the hard asset market is that, to say the least.
You better believe it, Randy. Again, just very confusing. And, and what a way to start the year, basically. Still, a lot of the traders are not here yet. In fact, they'll come back on Monday. So the markets still were very lately traded. But the first trading day, gold was up very strong. The stock market obviously responded to the fiscal cliff meeting type of thing, which is really pathetic when you think about it. I mean, the fiscal cliff was such a big deal. And everybody in Congress was complaining about having to come back from vacation. I mean, I find that just an unbelievable situation. And the fact is that all they did was really kick the can. It's almost like they don't even care about it. It's just like they don't even care. And basically, they did come to a conclusion. At least at this point here. Again, a lot of people are not satisfied with it, but we saw, close to a 300-point increase in the Dow that day. We saw gold prices go up $20. We saw silver prices up almost $1, and then the markets reversed after that. So basically, when we saw the markets first thing Friday morning, the gold market was down as much as $40. Silver was down over $1 on the day. And the FOMC meeting, it means the Federal Reserve Open Market Committee, what they basically think is that quantitative easing may end faster than they thought. So based on that, they sold off the gold and silver market. As we're taping the show, the markets come back very, very strongly because nobody really believes that they're going to stop printing money. In actual fact, I find it almost impossible to believe that they're going to stop printing it because where's that other $4 trillion going to come from? So the fact is that the U.S. is in debt right now for $16 trillion. They're going to add at least $4 more trillion over the next 4 years, bringing it to $20 trillion. There's just no way in the world that type of money could ever be paid back. And in actual fact, the interest on that type of money is insurmountable. So the fact is they will have to continue to print money, and it will continue to move the gold and silver markets. So what did the markets do over the last year? Basically, gold finished up approximately 6% higher than it was last year, and silver finished higher also. So basically, this is 12 years in a row that the gold and silver market has staged substantial rallies. Other years it's been a lot stronger than 2012, but all in all, with 2012 being an election year, the fact is that there was a lot of uncertainty in the market, and basically the market did not hit the levels that myself and many other experts thought it would. Many thought that silver would be back over $50, trading as high as 50 to 60, and I was one of those people. And many people thought that gold would break through the $1,900 level and possibly go to $2,000 to $2,200 or higher, and I was also one of those people. So, again, last year, or 2012, the markets did not do what I anticipated that they would do, and basically I am still very bullish on the marketplace. See, we're not traders of this market. If you're trading the gold and silver markets and the oil markets and these type of markets, there's no chance of success. The fact is that the markets should react to certain situations, and at times they don't. And here's what I'm talking about. If a report was to come out and say that the corn crop was much smaller than they anticipated, the immediate response in the commodities markets would be that the corn market would skyrocket in price. The same thing with oil, the same thing with any commodity. However, in 2012, when the Federal Reserve did announce that they were going to print money to oblivion type of thing, they were just going to continue to print, gold and silver should have skyrocketed on that news, and it didn't. So, the fact is that, is it possible that the gold and silver markets have been suppressed over the years? It appears that is possibly the case. I would hate to think that these markets are that controlled that they could actually control what a market is going to do or not, because there's so many traders out there that have their own opinions on market. So I don't always buy into this manipulative situation that a lot of the other analysts do believe is going to happen. I believe that the gold market and the silver market will respond primarily to two things. One, the U.S. dollar, and number two is inflation. Basically, there are countries like China, India, and Russia that are buying all the gold and physical silver that they can possibly get their hands on. And unless we think that China doesn't know what they're talking about and is just making a huge mistake, the fact is that we have to stay with the gold market. And if we look at where gold was at the all-time high of 1,920, and we're trading just below 1,700 right now, to be $200 off the all-time high in gold with everything that went on this year was not really a bad result. Silver going from 50 down to 26 back up to 35 was a very volatile market. But again, these markets need to be volatile, because to get the type of moves that we anticipate is going to happen over the next 5 years, the potential for gold to hit into the thousands of dollars, $2,000, $3,000, $4,000, $5,000 or higher, and there's been higher predictions than that, you need that type of volatility. But basically the fundamentals in the market, as far as I'm concerned, are very strong for hard assets, and we are not really changing our view of these markets at all. Before I give you the predictions for gold, silver, and oil going into 2013, I want to bring something to your attention that I think is extremely important. Because the fact is that in every market you have buyers and sellers, you have people that have their own opinion as to what the market is going to do. We believe that markets like gold and silver will hit record highs because of certain scenarios, weak dollars and inflation and sovereign debt and that type of thing. However, there are situations in the market, for example, that happened in 2011 that I thought were ridiculous. And follow me on this. In 1979 and 80, we saw gold prices go to $800, and we saw silver prices go to $52 at their high. And then we started to see interest rates start to go up because inflation was extremely heavy at that particular time. And that's why gold went from $125 to $850, and that's why silver went from $1.50 to $52 was because of inflation. And when gold hit these record numbers and silver hit these record numbers, it was a frenzy. It was in the newspapers every day, in the financial news every day. Everybody was talking about how much gold did you buy, how much silver did you buy, and prices were skyrocketing. And like with the dot-com situation back in the late 90s, it was like a euphoria. People thought that, they had a license to print money, and all you had to do was buy gold or silver at that point, and you were going to make a fortune. Well, the general public generally buys at the wrong time, and basically when silver hit $52, something happened. The COMEX exchange, where gold and silver is traded in New York, they have to balance their books at the end of each day. And because of the mass frenzy of people buying silver, futures contracts primarily, what they found is that there was much more silver that was bought than was actually owned by the COMEX exchange. So what they had to do, because of this discrepancy, they closed the market for 2 days to try to work things out. When they reopened the market, silver plummeted, as did gold. Silver went from $52 all the way down to $26. Now remember that, because that's extremely important. Now let's fast forward to 2011, 2012 in that particular time. Gold and silver have been on a major tear. We saw silver go from basically under $4 all the way up to $50. So we hit that magic number of $50 again. But this time, because of the mass frenzy of hedge funds and everybody, buying so heavily into silver, what they did is, instead of closing the market like they did in 1980, what they did is they raised the margin requirements. And basically what that means is that they made it more expensive for speculators to buy silver on the COMEX exchange in futures contracts. I know that sounds a little bit difficult to understand, but basically they didn't close the market, but they raised margin requirements 5 times in 2 weeks and made it way too expensive for smaller investors to trade silver. And consequently what happened, silver dropped from $50 all the way down to $26. So you had a very similar pattern. In 1980, the market fell because basically the move was over. It hit $50. They closed the market for 2 days, but interest rates were going up substantially, and what followed that was interest rates up to 22%. Why is this time different? Well, we saw silver go from basically $4 all the way up to $50. They raised the margin requirements substantially many days in a row to kill the speculation in the market. The silver market fell all the way back down to $26. However, this time it's different. This time, they're not raising interest rates. So that tells me that the move is nowhere near over, because if they were concerned at this point about the same scenario, they would have raised interest rates already. In fact, the Federal Reserve is keeping interest rates at 0. So basically, silver went from 26 back up to 35 and is trading in a range right now between $26 and $35. What I believe is going to happen is that we are going to see these markets break out again this year. I don't see any way that the U.S. dollar is not going to go down because of a tremendous printing of money. And again, the situations in Europe have not really improved at all. And you've got other scenarios. You've got situations happening, in the Middle East that we're going to talk about also. So all in all, $26 silver, in my opinion, is the floor at this point here. So basically, when we saw silver go from 50 back down to 26, that was the same number as it hit in 1980. This time, silver bounced back up and went to $35. It's trading in a range right now. So here's what I see happening in 2013. And again, it's extremely difficult to predict this at this point because, again, you've got so much going on in the government, and basically we have very little confidence in the decisions that are being made at this point. A lot of the decisions that are being made by the government at this point are out of desperation. They've never been in a scenario like this before, so they really don't know how to handle a scenario like this. But all in all, I believe it is definitely going to work into our favor. So I do believe that in 2013, gold is going to retest the old highs of $1,900. Gold will go up as the U.S. dollar will go down. The U.S. debt will bring down the U.S. dollar, and that's what Randy just brought up before. We dealt with the fiscal cliff, which was a joke, but now they have to deal with, with the debt situation, and Obama will probably end up winning that scenario also. So now they're going to have to print and print and print, and we're going to be talking about printing about $1 trillion a year, and that will reduce, again, the value of the dollar. So we are not traders of gold. We are not traders of silver. We buy and hold, and that's what we do. And basically, there's a major difference between the two, because the fact is that if you're trading on a day-to-day basis, you're going to make mistakes along the way and you're going to do your money. But buying physical gold and physical silver is going to allow us to stay in the market long enough in order to see the type of moves that these markets are going to give us. So I do believe that gold could retest the old highs of $1,900 this year, but there are fundamentals in the market that could make the market explode. Again, there are certain scenarios in the markets right now that we could wake up in the morning, one morning, and see gold up $200. That's how substantial these markets can move. But for now, to be on a more conservative basis, I'm comfortable with the old highs of $1,900 gold, and I'd be very happy in 2013 to get back to that level. Now, what we need to see in order for that to happen is for gold to break 1,800. Not 1,900, but believe it or not, 1,800 is a very important number for gold. Every time we've gotten close to gold at 1,800, it's backed off. I do believe we will break $1,800 and go to 19 and possibly higher than that, but on a conservative basis, I do believe $1,900 gold is a good number for 2013. The other scenario is silver. Silver will move for the same reasons as gold will, except silver should be much more bullish than gold. Silver, there's so many needs and usages for silver, especially in computers and in medical situations and things like that, that silver will not only invest to a weak dollar, inflation, and investment concerns, but it also supply and demand. And we believe that supply and demand will be the major factor that will move silver prices substantially higher. Again, on a conservative basis this year, I think silver will trade between $40 and $50. The important number for silver is 26. We do not want to see silver break below the $26 level. There's very, very heavy support in the silver market at $27.50. And basically that's an important number. And again, at this point here with the volatility in the market, I just think that we're trading within a range. However, this market will break out eventually, and when it does, we could see gold and silver prices increase substantially. So again, we anticipate that silver will trade between the $40 to $50 level. A very important number for silver at this point is $38. If we can break above $38, we could see silver prices take off that much quicker. But over the longer term, because of the inexpensive price of silver compared to gold, we do believe that silver will eventually close the gap, and the ratio will be below 20 to 1. If you look at the charts on silver going back to 1979 and 80, you'll see what I'm talking about. Silver made a straight up move up and then a straight down move. That is not happening in the markets at this point. So I don't want you to be concerned with the fact that, silver came back down to that $26 level. It was an important number, but now silver rallied back off of that number. And again, I just see interest rates staying low for the next 4 years, and I don't think that the Fed is going to raise interest rates until year 5. And again, within that period of time, we should see substantially higher gold and silver prices. I do believe the U.S. dollar will fall this year. Again, if it gets below 78.50, we think the market could fall all the way back down to 72.5 cents, and that could literally bring gold prices over 22 to 2,500. So we do have strong potential for gold to get well above 1,900, but on a conservative basis, 1,900 is a good number, $40 to $50 in silver. And oil basically is trading within a range between $80 and $100. And it will continue to do that, but inch higher, because we are very bullish on oil. I personally believe that oil over the next 2 years will be over $150 to $200. However, one of the major predictions for this year is that Iran will have nuclear capabilities. And I find it impossible to believe that Israel and the U.S. is going to allow this to happen. I know that Israel will not allow this to happen. So basically, where we thought that it could have happened last year in 2012, that Israel would have gone into Iran, we do believe that it will happen this year, because Iran will have nuclear capabilities sometime within 2013, and I just don't see how in the world Israel is going to allow that to happen. Watch for oil prices possibly this year to hit $150 to $170. That's what I see happening at this particular point, Randy.
The one company Harold recommends you use, they're a Canadian company. They've been in business over 10 years. When it comes to investing and helping you be educated in the hard asset market, gold, silver, platinum, palladium, is rarecoloreddiamonds.com. Obviously, is Harold's website, but the company he recommends you use is Worldwide Precious Metals. Worldwide Precious Metals. Their website is wwpmc.com. wwpmc.com. Their telephone number 1-866-623-2002. Harold has been doing this show, for those that may be listening to us for the first time on News Talk 1010 in Toronto, since a little after 2001, 9/11. I joined him in February of 2002. And back then, Harold correctly predicted gold. It was around 250, 270 that gold would go up to the highs that we have seen. Also, the silver market was around $3.50 to $4. He recommended that market. The oil market, when it was $18 to $20, he recommended that. The euro, he recommended that as an investment when it was 87 cents. He said the U.S. dollar would go down. And we'll talk about it a little later in the show, but Harold's maybe one of his best recommendations in August of 2005, he wrote a report on rare colored diamonds. He was the first to bring that to our attention. Naturally fancy colored diamonds, the best kept secret. And this was a report he wrote back in 2005. We'll talk about diamonds a little later, but that is Harold's track record and the company he recommends you use when it comes to investing in precious metals. 1-866-623-2002. 1-866-623-2002. Worldwide Precious Metals, wwpmc.com. We have a free weekly newsletter we send out via email. It's absolutely free, does not cost you a thing. You can go through it in 10 minutes. You can spend hours. You can read it on your tablet, your smartphone, your computer. It's a very simple read, but you spend a lot of time working hard for that money, and we want you to preserve that money and make it grow. So listen to the radio show. They are archived on Harold's websites, hesradio.com and rarecoloreddiamonds.com. We also have the podcast through iTunes. Listen to our radio show. Take seriously the advice Harold is giving you, because he has a proven track record, and get our free weekly newsletter. In our newsletter this week, as usual, we have our charts of the week. We have our quotes and quick hits. We have information on gold, silver, and the real estate market. And some of the quotes that we have, and this goes back to what Harold was talking about in relation to Israel. Financial expert Michael Pinto said Israel will finally address the Iran issue. I think they attack Iran in April or May. That sends oil prices of WTI to $170 a barrel. If that's the case, then you can kiss whatever nascent recovery we have in this country, the United States, and around the globe, goodbye. Also, Rupert Murdoch said this week via a tweet, fiscal cliff likely avoided. Big victory for Obama. Please him, but won't fix economy. Next crisis coming. Runaway inflation. And one of the top quotes I thought from Robert Fitzwilson, he was interviewed by King World News, Eric King and King World News, a great site. Given there is no end in sight for increases in the monetary base, the financial potential energy contained in the current price of gold is extreme. Once that force is unleashed, the price of gold will rise in a dramatic fashion. The bottom line is the downside for gold is minuscule, and the upside is many times the current price. Educate yourself about this market. Speak to the experts at Worldwide Precious Metals, the company Harold recommends you use, Worldwide Precious Metals. Their telephone number, 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on January the 4th, 2013. Happy New Year. Our time is 9:01 Mountain, 11:01 Eastern. Radio show runs on our new station in Toronto, News Talk 1010, legendary radio station in Canada, CFRB. Also 630 CHED in Edmonton, QR77 in Calgary. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and hesradio.com. Should mention, we do have a podcast. It is through iTunes. You can listen to our radio show on your smartphone, your tablet. Just put iTunes on your portable device. You can subscribe to the podcast. It automatically comes in. You can listen to our radio show anywhere, anytime. We are portable. When it comes to investing in precious metals, Harold recommends Worldwide Precious Metals. They've been around, a Canadian company in business for over 10 years. They're the experts in this very specialized field, and you want to use only them as they specialize in this market. And by the way, if you want to buy and hold your metal, that's what we recommend. They can help you. If you want to trade the market, they can help you. They're there to help you maximize profit, minimize risk, and this is something that is a liquid asset. You can buy and sell with a phone call. Speak with Worldwide Precious Metals, www.pmc.com, 1-866-623-2002. Back in 2005, Harold wrote a special report, and he was the first one to bring rare colored diamonds to the world as an investment. In August of 2005, he wrote Naturally Fancy Colored Diamonds, the Best Kept Secret. And he went on to start rarecoloreddiamonds.com, which has been a massive, massive success. He'll talk about his other website as well, hsfineauctions.com. There's an auction coming up. We'll announce the date. But at rarecoloreddiamonds.com, we have our featured diamond of the week. The diamond is a 0.91 carat cushion-cut fancy deep pink argyle. To give you a little bit of history on the Argyle mine for those that are new to listening to our show. More than 90% of the world's pink diamonds come from the Argyle mine in the East Kimberley region in the far northeast area of Western Australia. At Argyle, pink diamonds making it to the annual tender are literally 1 in a million. For every 1 million carats of rough diamonds produced from the mine, only 1 polished carat is offered for sale in the tender. In terms of global diamond production, pinks make up only 0.03%. And we have a picture that we have found, and we can send it out to you. It's a champagne flute. And in that flute, they have pink diamonds, and they have the year's production in that flute. It is very, very small. Large pink diamonds tend to go to museums, are gifted to royalty, or end up at auction houses such as Christie's or Sotheby's. Christie's has auctioned only 18 polished pink diamonds over 10 carats in its 244-year history. That's right, 18. Experts agree that prices for colored diamonds, pinks in particular, are on the rise, noting that the barrier was broken in recent years that put pinks previously selling for $500,000 to $600,000 into the 1 million a carat realm. Buying a pink today is like buying a Picasso painting while he was still alive. This is nature's art, nature's most beautiful art. And this week's featured diamond is a 0.91 carat cushion cut fancy deep pink argyle. Harold, it's a stunning diamond. And I should mention that the 10 most outrageous items people bought in December, and you can see this in our newsletter, one of them was at our auction. It was a rare reddish-orange diamond sold for $2.09 million. Yes, the diamond market is red hot.
Oh, you bet it is, and very, very pleased that we're in this business, because with all the volatility in all the markets around the world, this is the one staple. Again, it will respond to all the same scenarios as gold will without the risk. You know, so diamonds, and not all diamonds. In actual fact, most diamonds are not considered gem quality and investment quality diamonds. Basically, most people would think that you have to invest millions of dollars to make money in the diamond market, and you really don't. In actual fact, the diamonds that tend to go up the most percentage-wise in diamonds. So basically, that's what we recommend very highly at this point here, because a diamond of the quality and the caliber of the diamonds that we're going to talk to you about in a couple seconds, in combination with other investments, will get you through these difficult times. In actual fact, a lot of our clients feel much more comfortable owning a diamond than they do stocks and mutual funds for their retirement. Let's face it, if you own stocks for the last decade or longer, you haven't made any money in the stock market. Your retirement savings plan has not even come back to where it was in 2008. But the bottom line is that if you were to take $20,000 and put it into a rare colored diamond like a yellow flawless, and $20,000 into your retirement savings plan in stocks or mutual funds, in 10 years, you know that your yellow flawless is going to be worth 80 to 100,000. You have no idea what your stock portfolio is going to be like. And again, we work too hard not to be able to know what our financial situations are going to do. So again, in combination with other assets, we do highly recommend certain diamonds that will not only increase in value and give you the opportunity to make money over the next 10 years, but on top of that, they're portable private wealth. If the world financial markets were to get into horrendous trouble, this could turn out to be one of the most important assets that you ever invested in, because it's portable, private. You could take it to another country and start all over again and sell it in different currencies. It's a very, very important asset. Now, again, there are several different colors of diamonds. There's red diamonds, there's blue diamonds, there's green and orange and black and yellow and pink, and then there's clear diamonds and white diamonds. The diamonds that we recommend, we're recommending 3 different types of diamonds at this particular time. We're recommending yellow flawless diamonds because they have a track record. We're recommending Argyle pink diamonds because the mine that produces 90% of them or more is going to close in the next 5 years, and the prices should skyrocket by 8 to 10 times what today's prices are. And we're also going to recommend to you a diamond that's not a color diamond, it's actually a colorless diamond. So let's start with the yellow flawlesses. They start at about $15,000. These diamonds go up by 25% a year. In 1980, you could have bought one for $500. Now they're $20,000 to $25,000. They never ever go down in value, but you have to own the South African diamonds, which are the highest quality yellows, and you also want to own internally flawless. If the diamond is flawed, it'll still go up, but nowhere near what a flawless yellow will go up. And again, the 20 to 25% increase in these diamonds per year is primarily because of the strong yellow color and the fact that the clarity grade is internally flawless. They start at $15,000 and they go up from there per carat. And again, I highly recommend them, especially with what's happening in the world financial markets at this time. The second market is the Argyle pinks, and Randy highlighted the Argyle pink market to you, and the featured diamond, which is a close to 1 carat cushion cut, fancy deep pink SI1 Argyle, one of the rarest pink diamonds you will ever see. You see, pink diamonds are small. They're the most concentrated form of wealth in the world. Most Argyle pinks are under a 1/4 carat. So this one being a .91 is considered a very large Argyle. In fact, the largest Argyle to come out of the mine this year, which is the Argyle Siren, sold for $2 million. This deep pink Argyle is almost red in color. It's considered a very large Argyle pink and is one of the best Argyle pink diamonds you could ever invest in. We anticipate that this diamond will be a 7-figure diamond within the next 10 years. And basically, we feel that these diamonds, these Argyle pinks, will go up 8 to 10 times what today's prices are. So if you go on our website, rarecoloreddiamonds.com, rarecolored with a D, diamonds.com, and go to the loose diamond section, you will see all the different colors of diamonds that we offer. The yellows are all there, and you're going to see them in video, and they all have GIA reports. You're going to see the pink diamonds. The Argyle pinks come in fancy pink, fancy intense pink, fancy deep pink, and fancy vivid, which is the strongest color and consequently the most expensive. Then you've got the D flawless whites. Now the D flawless white diamonds, again, are colorless diamonds, the opposite of the other 2 diamonds that we recommended. The reason that we recommend them is that they're ridiculously rare. They represent, the ones that we carry, 0.001% of the marketplace. That's how tiny this market is. We cut about 900 carats a year of these D flawless white round brilliant diamonds. And the reason that we're saying that is that there is a fund, a diamond fund that was just approved in Europe. It's going to start trading this year in 2013, and all that they're allowed to buy at this point, according to their deal with the governments, with the compliance, and with the banks, are these D flawless round diamonds between 1 to 5 carats. We anticipate that the prices are going to skyrocket because this fund is going to buy almost all of these diamonds, leaving none of them available. So basically what we want is for our clients to invest in these deflawless whites before this fund buys them all. We want you to make the money, not pay the money. And basically, these diamonds can go up 25 to 50% a year. In 2008, when the stock market plummeted by 50%, these diamonds went up by 50%. That's how amazing they are. D, meaning the color D, means that it's a colorless diamond. It's not white, but it's colorless. Flawless, meaning the clarity grade flawless, and the cut is a round brilliant. That's what the banks want, that's what they're comfortable with, and that's what this fund is going to sell. So we very, very highly recommend, if you can afford to invest in this particular market, is to buy these D-flawless rounds before this fund buys them all, and then there will be no more to buy till the next year. So basically, these D-flawless white diamonds, you can see them on our website. They're absolutely spectacular. In fact, when you see them in person, it's like no other white diamond that you have ever seen in your lifetime. It just has so much fire to it, and they're perfectly cut. And the ones that we have are excellent in every category, which makes them even more rare. They're excellent in cut, excellent in symmetry, excellent in polish, and those are the hardest diamonds in the world to get. These diamonds can be 10 to 20 times what a normal white diamond would sell for. That's how valuable these diamonds are. Again, opportunities like this do not come around very often. The opportunity to buy an Argyle pink diamond, knowing that the mine is going to close in 5 years, is an opportunity that if you don't take advantage of this, it's something that you will more than likely regret for most of your lifetime. It's almost like buying a lottery ticket and playing the same numbers every single week. And the one week that you don't buy it, your numbers come up. It's a similar scenario. We know that with the pink diamonds, what's going to happen with them, because we saw a similar scenario in blue diamonds, and they went up 10 times or 1,000% from 2005 to 2012. We anticipate the same thing will happen with pink diamonds. And again, if you're looking to make money in these markets, the pink diamond market could give you the biggest return on your invested dollar, because there will be no more pink diamonds after the mine closes in 2018, which is only 5 years from now. The D-flawless whites, in my opinion, are a no-brainer. The only problem is that they're not inexpensive diamonds. To get them, to get a 1 carat D-flawless round of very high quality could be in the $80,000 to $100,000 range or more, whereas a normal white diamond would be about a tenth of that price. But you always get what you pay for, and when you buy the very best, you always get the most back for it. So go to the website, rarecoloreddiamonds.com, go to the loose diamonds section, look at the yellow flawless diamonds, they're in the 15,000 range and up. Look at the Argyle pinks, they start at about 35,000. And look at the D-flawless whites. You can get involved in those for a carat for starting at about the 60 to 80,000 range and up from there. In fact, I have a 5 carat D-flawless round that sells for $1,200,000, and it's considered one of the rarest white diamonds in the world. We recently just sold a 22 carat round brilliant D-flawless white that sold for over $8 million. So these diamonds are real. They're all graded by GIA. They're the diamonds to own, and the diamonds that will give you the biggest return on your invested dollar with literally no risk.
Speak with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Speak with him personally and privately. Telephone number 1-800-432-1022, 1-800-432-1022. And remember, when you're speaking with Harold, you are talking to the guy who brought this market to the world. Back in August of 2005, he wrote the report, Naturally Fancy Colored Diamonds, the Best Kept Secret. He was the first person to bring this market to your attention. And he started rarecoloreddiamonds.com and also hsfineauctions.com, a way to eventually sell your diamonds somewhere down the line. We'll talk about the next auction a little later on. Go to rarecoloreddiamonds.com and take a look at the featured diamond of the week. It's a 0.91 carat cushion cut fancy deep pink Argyle. Argyles, when that mine shut down, are going to be worth a lot of money. And if you take a look at colored diamonds, 5 compelling reasons to invest: privacy, portability, great estate planning, price stability, and long-term growth. And I think The key, as I've said on past shows, Harold, is when you see a Bernie Madoff or a Stanford Financial or some of the other Ponzi schemes that have come out of the woodwork over the last few years, unlike a stock certificate, bond, or T-bill, this is an investment you can hold in your hand. Colored diamonds can be mounted, displayed, appreciated on fingers, wrists, ears, or necks, and obviously, the loved one will appreciate it greatly. And you can always unmount them or put them on anything that you want for resale, because they actually do fetch a better price if they're in a necklace or a ring or a pendant, something along the lines of that. But the 5 compelling reasons: privacy, portability, estate planning, price stability, and long-term growth. If you have not thought of the alternative asset class for your portfolio, think about rare colored diamonds, rarecoloreddiamonds.com. Harold's telephone number, 1-800-432-1022. And Harold, we do have hsfineauctions.com, and you are planning an auction sometime at the beginning of 2013.
Yes, we certainly are. The thing is that an investment is only an investment when you can resell it. Stocks are traded on the Dow Jones exchange in New York, and commodities are traded in New York and other areas around the world. There's always been a market to resell and buy, certain commodities, stocks, bonds, and those type of things, but that never ever existed in the diamond market. And basically, myself as an investment advisor and somebody who's been in the investment business for 35 years, I always looked at the diamond market as a hidden asset, as a very important asset for portable private wealth. But in 1979 and 80, when I saw what certain diamonds did with inflation when they went up 500%, that's when I was positive that it was a phenomenal investment for my clients, very conservative, but a phenomenal investment going forward. However, what this industry needed was a way to resell hard assets, not only diamonds, but gold pieces and coins and emeralds and sapphires, and nothing like that ever existed before. So I set off to build that secondary market so my clients would have the wherewithal in which to sell their high-end collectibles. And with a company that I've dealt with for many years out of Vancouver, Relentless Technologies, these brilliant young guys built me the only live real-time auction site ever built. There's nothing like this that exists anywhere in the world today. It's not like an eBay site where you put in a bid and a couple days later you find out whether you won something or not. This is a live auction. I come on and sell every single piece. It's one of the most exciting businesses that you've ever seen, and it has never, ever been done before. Now, we've held several very successful auctions. In fact, at the auctions that we've held, over 90% of the diamonds that we have put up have sold. In fact, one of the things that we're famous for is that Oprah Winfrey took 100 women to Australia in 2012, or 2011 actually, and she gave them all a beautiful Argyle Oprah necklace in the shape of an O with all little pink diamonds in it, Argyle pinks. A woman had come back, needed money desperately, and asked us if we would buy it for $7,500, and it actually sold at auction for $42,000. So the auction site is doing extremely well. We're the only company that has it, and we built it so our clients can resell their high-end collectibles. In fact, we participate with you. When you do well, we do well, and if you don't do well, we don't make anything. So basically, when you buy a diamond and sell a diamond through my company, H. Siegel Fine Auctions, we get 10% of the profit only. If you buy a $20,000 yellow and 10 years from now you sell it for $100,000, we get 10% of the $80,000. If you buy an Argyle pink for $50,000 and sell it for $500,000, we get 10% of the profit only. And this is the way that we've always worked. So again, H. Siegel Fine Auctions is the only company of its kind. We're the only company that can deliver these amazing diamonds directly to you, and we're the only diamonds that can company that can resell them for you. So again, we will be having our next auction more than likely the end of January, and on next week's show we will announce the exact date. We're just getting together the catalog and everything that will be coming up at the next auction.
I know that Harold's son, Jonathan Siegel, wrote an article on rare-colored diamonds for a magazine called Luxio. And there was actually another article that Harold was interviewed for through that magazine. If you would like to read those articles, Harold will be happy to send them out to you. And I should touch on one report, and this is a report that we had in our newsletter. I guess it was about a week or so ago, and it was done by Bain & Company. It was on the global diamond industry portrait of growth. And this is an extensive report, and I know Harold has had a chance to go through it. It has lots of interesting charts and information on the diamond market, and they see the diamond market as a growth market for a long period of time. And they actually project that global diamond demand for roughs will exceed supply through 2020. And a lot of that has to do with what's happening in India and China. These markets are coming on strong, will eventually overtake the United States for diamond demand. And Harold, as we've touched on past shows, over in India and China, engagement rings are something that have not been around for a long period of time, but they are starting to catch fire. And you're starting to see people investing not only in gold and silver over in the Far East, but diamonds as well. And this, you must get this report from Harold. Go to rarecoloreddiamonds.com, connect with Harold there, or give him a call at 1-800-432-1022, because this is a must-read report from Bain & Company on the diamond market. And if you want to see a full glass, a goblet represents 95% of the world's annual production of pink diamonds. We can send you that picture as well. It's a diamond, diamonds in a champagne glass, a goblet, and to see all those diamonds and know that is it for the entire world. It's a stunning, stunning picture. I was able to track it down on the internet, and when I saw it, I just could not believe it, to know that in that glass, that was it for the whole world for 1 year. Harold, we have about 3 minutes left in our show here, but it is an exciting time for diamonds.
It certainly is. There is a huge demand. There's a very, very tight supply. Again, educate yourself. Not all diamonds are investment quality diamonds. Just because a diamond is colored does not mean that it has a track record and it's going to go up as much as certain other diamonds. The diamonds that we're bringing to you are the diamonds that we've done research on, that we've owned and dealt with over the last several decades, and again, feel very comfortable for our clients owning these diamonds, especially for longer-term investments for the next 5 to 10 years. Again, if you're not happy with what's happening with your retirement savings plans, I'm saying that there are things that you can do with it, but I'm saying that a diamond will do much better in your retirement savings plan than stocks and mutual funds.
Connect with Harold, rarecoloreddiamonds.com, telephone number 1-800-432-1022. Get our free weekly newsletter from Harold or Worldwide Precious Metals to invest in gold, silver, platinum, palladium. Speak with Worldwide Precious Metals, the company Harold recommends you use, wwpmc.com, 1-800-632-2002, rarecoloreddiamonds.com, 1-800-432-1022. You can get our free weekly newsletter from them. Harold also has a special diamond newsletter. And if you go through the newsletter this week, we have Jim Sinclair, one of the godfathers of gold, saying that the Federal Reserve in the United States has no practical option but to keep quantitative easing going. In fact, the fiscal cliff in the United States is going to raise taxes on 77% of Americans, and then the debt ceiling fight is yet to come. Bill Gross has come out and said he believes that gold will do very well in 2013. Also, two things to keep in mind, and we haven't really touched on it very much, is Europe. And it was interesting. Angela Merkel, the leader of Germany, came out and said that the financial crisis over in Europe, the sovereign debt crisis, is far from over. Also, in Greece, the debt crisis is far from over, and the UK faces a 50-50 risk of suffering a triple dip recession. Not a double dip, but a triple dip. So it's going to be a very interesting year, Harold, with about 30 seconds left. A very interesting year, and people need to be positioned accordingly to obviously protect themselves, but take advantage of the events that are going to happen in the financial markets.
You bet, Randy. Again, I think it's going to be an exciting year, but something we need to stay on top of all the time. And again, I want to thank everybody for listening to our show over the years. We truly appreciate you listening to the show and your loyalty. I want to wish everybody a wonderful day and a very profitable day also.
Speak with Harold, 1-800-432-1022, his website, rarecoloreddiamonds.com, and the company he recommends you use when it comes to investing in precious metals. Gold, silver, platinum, palladium, they're the experts in that field. Speak with them, 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. We will talk to you next week.